Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So the market is grinding sideways, has been for a month. We're trying to get somewhere, and so far haven't been able to do that. So today I'm going to cover one thing going up and one thing going down or sideways so far. Gambling is up and transports are sideways. Gambling is an area that it really does seem to be a big momentum area, but there's a couple of charts in there that really look good. I have a relatively small list, but of that group, they look pretty interesting for some reason right now. And so again, we're going to cover off gambling, and the reason that I want to cover off transports is they're wobbling here, and I'm not just one or two, but you'll see on the charts just a little bit of pullback. Hopefully, maybe that's what it is. Anyway, let's get into the charts, and I'll show you what I mean. So first of all, I want to cover just where the market is right now. And one of the things that I'm noticing, so this is the NASDAQ advanced decline line, and it doesn't always lead to more to breakdowns. You can have a negative advanced decline line on the NASDAQ. Through history, that is proven over time. But the one thing that we do see here is the NASDAQ, even today with the NASDAQ closing up slightly, the NASDAQ advanced decline rolled down today. And using a 2-week moving average, we're still kind of making lower highs and not really very strong here. And I think we know that the NASDAQ is underperformed. So the point I want to make is it's not like everything's going great here. We actually have quite a declining trend since February, and the real problem with, when you look at these downshoots here, a bit of a surprise that the market's held up as well as it has, with this kind of continuing to push lower. So when we look at the high-low data instead of the advanced decline, what we see here is a dwindling level of new highs, and we're just about to go negative. We have 3.27. Very interesting. 3.27 more stocks making highs than lows. And then when we look at the actual indicator itself, sitting down here, so that was the 2-week moving average. So sitting down here is the 79 level, and that's the actual difference between the high-low. Pardon me, I was driving for a few hours, so not quite got my head in the game here, obviously. So anyway, the one thing I want to watch for is we still haven't taken out the prior highs. We came close, and basically it was a failed breakout. We're trying to hold this giant uptrend, and this uptrend is, if you ignore COVID, it comes off the 2018 December low and comes straight up there. So it's a pretty long trend line, right? We're 2.5 years. And so it's this declining highs that also give pause here. And then when we go look at the advanced decline line for the New York, it's fine. It's still trending higher, nothing wrong with it. Can't find any real reason to worry about it, except that when you look at the 2-week moving average, it continues to decline here. And then when you look at the actual price of the New York Composite, it's still holding up nicely. It made higher highs in May, so it's pretty good. It just hasn't done anything really since the 3rd week of April, and now we're in the 3rd week of May. So we're a little bit hesitant on that. And when we look at the high-low data for the New York, it was holding up very well, but you can see this sudden break lower here, getting quite weak, and yet we don't, the market really hasn't broken down, right? That doesn't look like a breakdown to me. So it's trying to hold up in the face of all of these kind of signals that are getting weaker, but not broken. And then when we go to the Canadian market, and one of the reasons I like to go to the Canadian market is it will usually crack first just because it's a smaller market. And so the point I want to make here is Canada's sitting at a new high, but you can clearly see the advanced decline losing momentums ever since the top in February. And then we've broken our uptrend on the advanced decline data and haven't really been able to start turning it back up yet. So it's looking a little weaker, and that's usually what I would find is a smaller market would break down before the big markets of the US. So it's one of the tricks I like to use as a Canadian, just making sure I notice the weakness in Canada or whatever. So I've got a little bit of McClellan oscillator stuff here. And the point on McClellan, so this is the McClellan oscillator in the middle here, and this is the summation index up at the top. And one of the things you see is we've got this McClellan oscillator not making higher highs each time it rallies, and it briefly got above zero and pulled back below zero. Now it can do that every day, right? So let's not get too hung up on one day. And then we see that this uptrend was working and has now started to slip. So that's a little bit of a problem. Now, when this summation index drops below, some say 500, some say 400. When it drops, that's usually when you get a bigger market correction. So it's still holding up relatively well, but it is pointed back down again after kind of swooping down from 750 down into the 540 level. So we're starting to get to an interesting place. Now, this is that same data I just showed you on the previous graph, but it's weekly. And the point to make here is what you can see here is you've got this big trend, same thing, narrowing, and then we're just tracking right around the zero level. And I've drawn my line in here at 400, and if it's going to start to break down, that's probably where we see a bigger correction. So far from week on week, after a couple of days, it hasn't changed yet. When we get into the NASDAQ, normally when it goes below zero, minus 200, that's an important area. Now, when we look left on the chart, there's a lot of places where it bounced right around this minus 200 level. So I don't want to get too bearish, but you can see when it starts to break down, right, when we had this breakdown in October 2018, that gave us a 20% correction, and obviously the correction in 2020, the COVID pullback. And then you can see these big dips here back in 2015. The market topped roughly in May, and then this was getting weaker, and as it started to break down here, got in around the zero level, and then as it really started to accelerate lower, it went down, had a big rally, and then did it all again. So we're in that flexion point, and just to make sure everybody's aware of it, it's kind of a place to be aware of. Now, my strength indicators, I don't usually review them on Market Buzz, but I do every now and then. And what's interesting is they're all three different speeds. Some take longer time horizons, some are much shorter, but all three of them, my regular one searching for highs, the fast and the quick, are all in the lower quadrant. So normally what I would look for is this to start to turn up from here. But I mean, it can stay down here for weeks if the market's ready to crack. So what's interesting is we've been rallying, even though all of my strength indicators say less and less participation. So we're in the narrow few that are still holding this up. So just to be aware of that. Okay, so let's jump over into the railways and the transports. The reason, obviously, the airlines are not a railway, so they are part of the transports. So the reason I want to cover these off here is these charts, some of them are looking a little bit better and some of them are looking tepid. So I just want to show you the differences. So here's United Airlines, sideways for a while, trying to rally a little bit this week. Hasn't really got it going yet. PPO has rolled over just above zero, and this upsloping trend line, I'll just draw it on this one, I don't want to do every one, but what you see here is this is breaking, and so for me that's a big caution sign that the momentum we had, and if you just, try to pick a common line here, this ignores the May low that they retested and then took back off again, but it hits in here, and up in here. So we've got this trend line. We want to make sure that holds. I think that's probably the biggest characteristic to be watching for here. The momentum's already rolled over, so do we start to lose some of these others? So here's Spirit Airlines. And you can see it's been pulling back for 3 or 4 months. Nothing really tremendous there. And I'm just going to change this to 1400 and save that. So the next time we go through that, we can see it just a little wider is what I did. And then here's American Airlines. And I mean, the chart's okay, but the real problem is we were declining through 18, 19. We've had a good rally from 10 to 20. Nothing really great looking here. So this chart still looks suffering. Now the scooter ranking says it's one of the better stocks out there. But again, we're really, we made our highs in March and we haven't really done anything since. We've been slowly pushing up from, I'll call it mid-April, so 5-6 weeks now. And we're just around the 10-week moving average. So I want to make sure that holds. But again, if you draw a trend line up here, we're sitting right on it. You can see the volume is declining. And once again, if we drew a trend line on the PPO, we've broken it. Now, this can turn here and start to take off to the upside. But the other thing we have to remember is the airlines did take on a lot of debt during this COVID situation. So eventually, and I realize it was at low interest rates, but eventually they're going to have some baggage in terms of paying off debt. Alaska Airlines is another one sitting right on the trend line here. So, and this has been a pretty strong airline typically. So, let's remember they're focused where Amazon and Microsoft are. There's a lot of people flying around out of there normally. The big thing to remember here is if this can get going, that's a pretty bullish place on the chart, but we're at prior resistance. We just can't get through the 75 level. And so as we keep watching, can it finally get the momentum? And that's a great question. So the scooter ranking was stronger. It's just pulling back gently below the 70. The chart's not broken. It's just telling us to be very, very cautious here. Now, looking in on Southwest Airlines, nice. If I use the absolute low, we're on the trend line. I would say there's another trend in here that's got us a little bit more room, but the same thing. The scooter rankings rolling over, the uptrend in momentum is breaking. We did make it to new all-time highs, not quite. All-time high was 65.12, 64.75 is what we got to in the rally. So we're sitting up against resistance here. I heard Jim Cramer mention that they look great. Well, that's not a great looking chart to me. I'd want to see the momentum rolling over as they get to resistance. So pretty important place for me to just at least be aware of this situation. So here's JetBlue. And again, we've got all of these airlines piled together, and how many of them are sitting on trend lines? Well, a lot of them. So be aware that they're trying to hold up. And I realize their bookings are good, but quite frankly, that was pretty well priced into the stock. I think everybody knew that there was going to be some bookings coming out of this. So Delta's been pulling back for 3 or 4 months. Same thing. It's starting to actually break the uptrend, which isn't something I would like to see. So when I look at this and I start to see the wobbles down here, it's not huge yet, but we're trapped below the 10-week moving average. It really needs to start getting going. If this rally starts to fail, that's a bigger problem for us. Okay, GATX commercial vehicles. This one's starting to roll over a little bit here. Lower highs in momentum, higher highs in price, so a negative divergence, full stochastic letting go. The StockCharts technical ranking not able to get back above 75. So United Parcel Service. Chart looks great, right? Nice bull flag coming up, bull flagging here. I see no problem with this. The one thing that I might throw out as just a little bit of a caution is if all of a sudden the people start to actually go to malls to buy their goods, both UPS and FedEx might notice somewhat of a drop in delivery. So I still think the chart's fine. I'm not saying negative things about it, but I would just say if this rolls over here and you've got negative divergence, so a higher high in price, a lower high in momentum, that's a bit cautionary. Okay, Expeditors International, this one's up and to the right. I find no problem um, that chart looks wonderful, and so far there's not a reason to dislike it. And what you see here is breaking out to new relative strength highs. That's just hit the buy button. That looks pretty good. FedEx, not telling you to hit the buy button, just saying it looks good. Okay, so here's FedEx 305 and 317. We're trying to get through prior high again, a little bit lower momentum. Want to make sure that follows through to the upside. Matson, here's an uptrend that's cracked, and you can just see now we've been sitting here for 3 or 4 months, dropping from 78 down to 59. But it doesn't look ready to turn yet. I will say the full stochastic's getting down towards the bottom of the range, so that makes it a little bit interesting. But until you actually start to see the turn or at least break the downtrend, I think I'd let somebody else own it. Here's Kirby Corp, uptrend. Again, just starting to crack. You see the PPO rolling over. This really never got going. I mean, in June it got to $63 and it's only at $65 right now. So hardly kind of a big run off the June prices of last year. CSX Corp. So railways have been in focus here a little bit with merger mania from CN and CP trying to take out Kansas City Southern. The chart looks fine. It's still trending higher. I will say it's just starting to put a little pressure around the 10-week, full stochastic rolling over a bit. So bull markets tend to bounce around this 50 level, so that's a good place to look. But we do have a little bit of negative divergence, lower momentum with a higher high in price. Scooter ranking down around 30, so it's moving up slower than a lot of its peers. Norfolk Southern trending higher. Still looks fine. I don't see any reason to worry about that one. CP in the debate again with around Kansas City Southern. This chart's still trending higher. When we go look at the Canadian National, that looks like it might actually win this. The chart doesn't look as good. So this one is pushing up. Here's your 10-week moving average, just trying to hold it. Again, a little bit of relative strength starting to underperform the S&P 500. Scooter ranking down around 25, suggesting there's a lot better large cap stocks to look at. And here's your lower highs in momentum. So lower low, lower high, a lower low, a lower high. That's really not what we want to see. Looking in on Canadian National, so the big thing that I look at on this chart is if you just take a horizontal line, drop it in here, whatever, if you pick 100, we're trying to hold this level. On the Canadian dollar chart, it's a little bit different, but this actually touches that line up there. Anyway, I think it's important that it doesn't end up breaking down out of this kind of topping pattern here. So I want to see this find support here at $100. Okay. Looking in on Kansas City Southern, obviously the whole merger mania going on around it. So this stock has moved from 220 up to 315. That's a bit of an increase. And so now it's just kind of wobbling up in this area as they figure out how this is going to work out. Rider Systems heading up and to the right looks pretty strong. Nothing really to worry about there yet. And then looking in on XPO Logistics, again, this chart still looks strong. Relative strength to the S&P is good. Scooter ranking above 75 and holding. Actually, that line might be at 70. And what you see is the PPO is making a lower high. So a little bit of wobble here, but nothing too significant. And Landstar Systems, that one's more interesting. The reason I find this more interesting is because you actually see the price kind of move away from the trend line and then come back to it. And pretty much now it's sitting right on it. We also have a trend line in PPO momentum, and this is just starting to crack. So to me, this probably suggests it's going lower. Now it's trying to bounce at this 50 level. That would be important. It did break out to new relative strength highs and then all of a sudden just kind of slowly give that back. So it's at new 3-month lows in relative strength. That's not really a great thing to watch for. But again, anytime these charts start to break their uptrend lines, you just want to be aware of them. Snyder National, big trucking company, orange trucks, you see them everywhere. Anyway, there's a couple of things I like on this chart. This one has a PPO trend line here holding up. You can see a little bit of negative divergence. I won't draw it right on it. You can see this is kind of tilting down here. So that's a bit of a problem as it tries to go through prior highs. And then when we look at this trend line here, want to see that hold, right? And so we're at the junction here where we really want to see what this has got. Scooter ranking got awfully weak here, and it hasn't been able to regain. So staying under 50 is not a bull market experience. Look back here, and what you see is when that starts to droop lower, that's a bit of a pain play. Okay, C.H. Robinson Worldwide, mostly, well, not mostly, a lot of logistics, refrigerated freight, that kind of stuff. PPO is sitting at a lower level here, holding above zero, which is good, but I don't want to start to see this go negative, right? I don't want to see this same trade work out like it did back here and then kind of put in a lower slide. Having trouble getting through. So we did get through this 92 level, got up to 105. Now we're back to the 95 level. So chart isn't really going anywhere considering those other ones like XPO are doing so well. Here's JB Hunt pointed up north. That looks good. I don't like this PPO trend line about to roll over. That's a problem initiation area for me. So as soon as I see that, that's a big caution flag for me that I want to, if I'm going to get involved in the stock, I got to wait for it to start to turn up and improve a little bit. But it is at a pretty high level, so it wouldn't surprise me. It needs a little time to relax. And then yellow, that chart's a little bit choppy for me, so I probably wouldn't trade it. And then looking at we're back at United Continental. So the idea that I wanted to show you when we went through the rails there was they're okay. CN looks a little bit weak. Some of the airlines are starting to, their momentum waves are starting to roll over. A few of the trucking companies are starting to roll over. FedEx and UPS both look like places to just pay attention because they have a lower high in momentum. When we get over into the gaming, again, I don't have many charts in here. It's a pretty short list, so it's kind of easy to go through. Boyd was looking pretty good, holding above the 10-week moving average for, basically since the COVID lows, which was pretty amazing. And now it's spent 3 weeks just under this 10-week. So is it got the momentum to finally turn, or are we actually going to start to watch this thing walk down a little bit lower? It's broken its uptrend line, lower volume. This isn't exactly perfect hunting, so that one might need more time. Maybe it's down to the 40-week before it gives us a chance to buy it again. And then Century Casinos, looks like somebody's gambling because this thing easily walked through the highs at $10 back in February, March, and it's up at $14.70. PPO still pointed up and to the right. Chart's still climbing, so it's hard to argue with going up. Looking in on Churchill Downs, they finished the Kentucky Derby recently, and what we see here is you've got this upslope. It's been broken. It's sitting on the 40-week moving average. Need to see that hold. I will say that this stock bounces particularly well when the full stochastic gets to oversold down around the 20 level. So we're looking for a bounce here, and you just happen to be right at the 40-week moving average. So at least it's a place to try and trade it from. I will say that, when you look at this bounce, it wasn't much of one. So, but this one here at $73 heading up to 97, you can make a little bit of money between those two numbers, so that's all right. And then looking at DraftKings, this one's on a daily chart just because it's only got a year and a half of history. This is pulled down quite hard. Now we're right at the, I'm going to change the chart setting a little bit here. So we had broken the uptrend. We come down below the 200-day moving average. Now the real question for me, and I like this whole area where I think they're going to play a bigger role in sports betting. This one looks pretty good, and you can see volume starting to pick up here as we come down to these lows. But as soon as that PPO trend line breaks, I'd like to be on board. That'll probably get us above the 200-day moving average as well. Scooter's right on zero pretty much, so 4.3. So there's a lot of better places to put your money. But if this thing can turn, you can see the Scooter ranking was really strong and then started to wobble, then got weak. And, it's just a good clue. You want to wait for that to really start to improve. Find something about it that's improving before buying. Full House Resorts, FLL. Trend line is still higher. PPO momentum has rolled over. Lots of volume coming in up at the top here. So doesn't mean it's a sell signal, a hard sell, but I want to make sure this trend line holds, or at least if you want to pick a lower slope, you don't want to slip below $7, let's say, and give it room to wobble up there. IGT, International Game Tech, this stock is sitting here around $20. 15 was kind of the 2019 highs, and now your PPO had broken the trend line but reverted back up. So normally my first trend line would go like this. Now my new trend line would go like this. So even though the momentum is slowing, I still want to make sure that I've got something guiding me, and so I wouldn't. I would use that lower slope line, and I just don't want to see it kind of roll over. When you see that, at least take some time off. If you go look at the Bitcoin chart, you'll see that PPO sell signal was a pretty nice place to exit stage left on the double. Las Vegas Sands, this one trying to head higher. Again, looking at this chart. Trying to head higher, but struggling a little bit, right? We've got declining highs. So there's not a real reason to go into this one unless it can start to bounce right here. But I can tell you the wind chart we're going to come up to and the MGM chart, they both look spectacular. So here is MGM, and the reason I like it, look at this, it's just sitting here sideways. PPO, yes, it's broken down a little bit, but I would just say the momentum's at a really high level. It's at 10%. That's huge. Scooter ranking is nice and strong, up around 90. This thing looks to me like it's just going sideways, and it's now starting to break out to new highs. The hotels are full in Vegas, so it's not a place I want to get out of, that's for sure. These charts look good. And then seeing this Melco, this is just too choppy for me. I wouldn't bother to own it. How do you know which way the trend is going to be next week? And here's Penn National Gaming. This one was looking really strong. Pulled back here, big pullback from 142 to 73. I think that's called half. And from there, it looks like it wants to turn and burn. So a big PPO downtrend here, or full stochastic pullback. If this thing can start to turn higher, I think you want to look at it to get back on board. The PPO rated 0, I've got them backwards in my head. The PPO rated 0, if this can start to turn up, that looks like a pretty nice place. Okay. Scientific Gaming, this chart's just breaking out to new highs here. Looks pretty good. PPO's now turned back up again. That's a positive response. And you're at 90% on the Scooter ranking. That looks pretty tasty as it goes through new highs. And here's Wynn Resorts. I don't know if you've stayed at a Wynn Resort, but I drive through Vegas on my way back from Phoenix, and it's just a lovely hotel. But the properties are very, very nice. The one thing I would say here is this is just consolidating sideways. It's starting to try and turn up this week, get back above the 10-week. That to me looks like a nice place to enter. And if all of a sudden you're at 3-year highs, pretty good bullish place to be. So I like the stock here. Volume still declining a little bit, which is happening across the everything. So don't be too alarmed that the volume's getting a little bit light, but I do want to see this break above the 10-week and hold, and that would get me back on board with that. So transports, a couple of them starting to look a little rocky in the gaming area or the gambling area here. I think a few of them have some upside sitting on the table for us to take part in. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time, and you can also see the recordings on StockCharts TV. And don't forget about StockCharts TV on demand, where you can just go look them up. Thanks everybody for joining me. Head over to gregschnell.com/explorer if you're interested in what we have over there. Thanks. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.